People ask me, Hayden, how do I invest my first $1,000? Am I supposed to invest in real estate? Do I invest in the stock market? What is a stock? What's this whole cryptocurrency thing? Is $1,000 even enough? I'm going to answer those questions shortly, but at the end I'm going to explain how I'd invest my first $1,000 if I were to start again today versus how I actually started investing my first $1,000 when I turned 18 myself. Of course, the video is not financial advice, but let's get into it. The first question, of course, is what is investing? Investing simply is buying something that will make you more money than you originally bought it for. If you had $100,000, you could easily go on a car website right now and buy a luxury car. But as we all know, the value of that car goes down over time, and you also have to spend further money on insurance, registration, servicing, and petrol. Or you can go put a down payment on a house, get a couple $100 every single week from rental income, and then over time, the value of the house appreciates. This sounds really cool in theory, but as we've established, you only have $1,000, so you can't buy a house. So what can we do? Why don't we just keep it in a bank account? I mean, you get 0.5% interest every single year, so why not just park all your money there? So if you put $1,000 in the bank account and only get $5 return every single year, that doesn't sound very practical or even worth it. In fact, inflation on average sits at 2% per year, so you're actually losing 1.5% of your money every single year compounding without you realizing. If all you did was save that $1,000, after 50 years, you'd only have $500 worth of real value because the worth of that money is depreciated. Okay, so what is the safest asset to buy then? Well, this is where something called government bonds come in. Let's say the government wants to build a hospital and needs money to do so. You can actually loan your money to the government, and in return they'll give you about 3.5% interest. This return does fluctuate, so do a bit more of your own research, but the point is, what are the chances that the government defaults on a loan, meaning they can't pay you back? It's pretty low because that means the whole country's economy would have to fail. In the US, for example, they have a really safe bond because they have a stable economy and they also have the world reserve currency. So that's why US bonds are considered the safest investment in the world because they have a really low chance of failing. But what if you want to get a return of 10% or more? This is where we get into picking individual stocks or companies that we like. Warren Buffett, who is regarded as the greatest investor ever, averages a 20% return every single year, which is actually double the market average of 10%. But Hayden, how are stock prices actually determined? Well, this is through something that we call market sentiment. For instance, if a bad company's reputation is really bad, the price goes down. If the company is reporting that they're making more money than previous years and are expanding, the price will usually follow upwards. These investments become really risky, however, because Enphase, an American energy technology company, last year went up 80%. However, Tesla last year had a lot of negative sentiment, so they're down 65%. So my point here is pick individual stocks at your own caution. But what if there's a way to reduce this risk and still invest in stocks? Well, index funds are the answer. Index funds are a basket of stocks like the S&P 500, for instance, which is the top 500 companies in the US. So when you're investing in an index fund, you're investing in the average of all those companies combined. So the top 3 stocks in the S&P 500, Apple, Microsoft, and Amazon, if one went up 30%, one went down 20%, and another went up 10%, that would average out to a 20% return. But if we project this small example onto a larger scale, it would average out all 500 companies. And on average, this investment goes up 10% annually and is considered very safe. However, some years like 2022, the market went down 19%. But in 2020 and 2021, the market went up 16 and 27% respectively. So you must be prepared that some years it fluctuates quite a lot, but on average returns 10%. Okay, so finally, Hayden, what is cryptocurrency? It is essentially a virtual currency that is built on something called the blockchain. It is simply a medium of currency exchange online. The simplest way to understand this is that a currency like Bitcoin is the same as the US dollar, and the blockchain processes transactions much like Visa or MasterCard. The difference is cryptocurrency is decentralized and isn't interfered with by a third-party member. This means it isn't governed by any central authority like governments or banks. The fees on transactions are also incredibly low and can't be hacked. Also, I went overseas to Europe recently and transfer between currencies can be quite expensive, but cryptocurrency can be used anywhere around the world as long as there is an internet connection. In terms of as an investment, these are really volatile and risky assets because so early in adoption. It draws comparisons to the dot-com bubble of the early 2000s because you're picking random companies essentially. However, as adoption continues, look into cryptocurrency further and hopefully pick some of the better ones. Popular coins include Bitcoin, Ethereum, Cardano, Solana, XRP, so you can start researching some of those and tell me what you think about them. Okay, so how did I invest my first $1,000? I just turned 18 and looked at videos just like this one about cryptocurrency, stocks, and index funds. I started with index funds by buying $150 worth of ASX 200 shares, which is the top 200 companies in Australia. Then I looked at cryptocurrency and invested $50 in Cardano and then $200 in each of Bitcoin and Ethereum. And then lastly, I put $400 in the NASDAQ 100 ETF, which is the top 100 tech companies in the US. I still think this is a reasonable strategy because my knowledge in cryptocurrency was pretty good at the time, and index funds have always been tried and tested, so I thought this was safe to put my money in. But Hayden, what would you do instead? Something completely different. These views have started getting traction recently and I've been getting thousands of views every single day, and this is based off purely education. I've started buying courses on content creation on YouTube and running a business as well as a multitude of books on finance and self-improvement. So to be honest, I'd allocate as much of my funds as possible to gathering skills that can multiply my income. I spent $150 on books a couple months ago, and it's going to take me a lot further than $150 in an index fund because I'm going to be able to leverage that knowledge into making more money. Even if you don't want to spend the money on courses or books, there's plenty of free content online such as YouTube, watching myself or other creators, as well as listening to podcasts that can educate you into making any amount of money. It all just depends what you do with that knowledge. But I know you guys want me to pick one single asset, and I will. If I was 18 again and had to pick one singular investment, I'd pick index funds. An S&P 500 index fund in particular because it pays a dividend and annualizes 10% a year. And then I keep putting my weekly paycheck into that index fund indefinitely. Anyway guys, that's gonna be the end of the video, but if you have a friend who's interested in investing but doesn't quite know where to start, share them this video because they might find it interesting, or even if you just thought it was a sick video. Also, I'm gonna link to my socials below. I post on TikTok every single day. I tweet pretty constantly on Twitter every single day, and I also post on Instagram every once in a while, so follow me there for more content. But anyway, heading out. Hope you enjoyed.